What's good, y'all? So this is how I made $300 trading the NASDAQ today. So let's get right into the chart. So real quick, before we do that though, I want y'all to hit the gear icon and change the quality to higher picture quality. That way you can see the different imbalances and things I'm drawing much more clearly. It really makes a difference when you're watching videos with charts on YouTube. I recently discovered that. So change the quality to higher picture quality on your YouTube settings on the video. So let's get back to the chart. So the first thing you'll notice on the daily chart is every time you open up a chart, the first thing that you should be looking for is where are your liquidity levels and where are your imbalances, right? So your liquidity levels are your highs and lows. So we have buy side liquidity here from December 26th. That was resting above us. So we can go ahead and mark that. That's something I was noting going into trading today. We also had some inefficiencies or imbalances below us. So you can see here that we had this daily buy side imbalance, sell side inefficiency, as well as this volume imbalance, right? Plus this inefficiency here below us. So you can see below us, we had two bullish fair value gaps on the daily chart. That could definitely be a draw on liquidity for the market, meaning that could potentially be where the market is looking to trade into. However, us being so close to this buy side liquidity as well as yesterday's high, right, which was the liquidity here, and you'll see that clearly when I go to the hourly, I was more bullish going into the day initially, at least for, the morning session, for us to come take out this liquidity and then trade lower. So that's kind of what I was looking to see happen. So if we go to our hourly time frame now, this is how the market looked going into the 9 a.m. hour, right before the market opened. You can see, again, what you want to do is mark out our liquidity levels here as well. So you can see we had some buy side liquidity here. This was Asia session highs from last night at 9 and 10 p.m. That was buy side liquidity that we wanted to mark out. And then you will also notice that we had yesterday's highs as well. Sorry, this was Wednesday's highs as well, which I think that's the same level that I marked on the daily, but we'll go ahead and mark that too. That was buy side liquidity that we had resting. So to me, I really was looking for the market to kind of draw into there before we went down lower to go rebalance these daily gaps. And then we also had an hourly gap here, right? So that was everything that I was potentially looking at going into the opening session. So because of this, I was bullish until we hit this liquidity or this liquidity, right? And then I would want to see what the market was going to do. And so, yeah, if we go to a lower time frame, we can see here, this is kind of what the market looked like as we were going into the 9 a.m. hour. So I'll kind of go ahead and fast forward this just so we can see what happened once the market opened. You can see we created a low here right at 9 a.m. And then that same liquidity that I had marked on the hourly, you can see it's up here. So you can see the market really started to expand. We had liquidity here as well, right? So again, you want to mark your liquidity on all time frames once you're kind of looking on different time frames. So you can see we had buy side liquidity up here. We had sell side down here. So you can see the market at 9 a.m. we ran up there. We did end up grabbing this buy side liquidity. It was a really shallow sweep. And then we came back higher, swept it again. And as the market opened, this is kind of what happened. We went higher and then we came lower and we took this buy side, right? And then now the market, once it takes this buy side, it's drawing back to the sell side here or here or here, right? All this is low resistance liquidity here, right? All this trend line liquidity, it's low resistance, meaning the market could take all that at once. So I was potentially watching to see what this would look like. So we formed a 1 minute fair value gap here, a 1 minute SIBI, right? So I was potentially looking for this to be what sent us into these lows, right? We want to mark this liquidity as well. This is a low. So we have sell side liquidity here, here, and low resistance liquidity here, right? So the market trades into this imbalance and then we trade lower and we do end up then coming and sweeping this sell side liquidity here. So at this point, I noticed that the S&P 500 had not taken out this low yet, right? The S&P 500 was much stronger. So that essentially meant that we had an SMT divergence with the NASDAQ and the S&P. I'm sorry, the NASDAQ and the S&P 500, because the S&P was still trading up here while the NASDAQ was down here. That is a very bullish indication, meaning we could definitely go higher. So at this point, I was looking for us to potentially have a change in state of delivery, meaning a close above these series of up close candles here. These two candles, I wanted to see the market, now that we've traded into our 1 hour gap. Remember, we're in a higher time frame imbalance, a bullish imbalance. We have a SMT. Now I just need to see the market confirm that it wants to go higher by allowing us to change the order flow from bearish, right? At this point, this is all bearish order flow, right? We're respecting bearish imbalances, respecting up close candles as order blocks. So at this point, I want to see us start to disrespect now these premium arrays and start to form some bullish discount arrays, right? Bullish fair value gaps, bullish order blocks, proportion blocks, those things. So you can see here, the market then does trade higher, right? And we form this change of state of delivery here. So we can go ahead and mark that as a change of state of delivery or order block, however you want to classify that. And then, you know, we do trade higher here. And ultimately, we do end up coming back down, retesting this change in state of delivery, and ultimately then forming an inversion here, right? Meaning this candle, this imbalance, this bearish fair value gap is now become a bullish one, right? We've disrespected the bearish side, and now it's turned, once we close above it, it's turned into a bullish one. So at this point, I was potentially looking to see us trade back into this proportion block here, right? I wanted to see this proportion block trade and become, you know, my entry mechanism. So a proportion block essentially is a order block on top of an order block. So these down close candles are an order block. This down close candle becomes an order block once this candle closes up here. So an order block on top of an order block is a proportion block. So I was potentially looking to take my entry when we came back down here, which we ultimately did here. And I bought 5 contracts on the NASDAQ with my stop loss below here. My entry was really a little bit higher, but I can't really show that on this. So, and then I was targeting the liquidity that we had here. So this became my target. You can see this was I had a really pretty much tight stop from this proportion block down here. If we went below this bullish fair value gap, I would be looking to potentially exit this trade anyway, because to me, the market should now, if we're truly bullish, we should now respect this bullish fair value gap. If the market is truly now in buy side delivery, right? We're retesting this order block. We're in a bullish fair value gap, right? We're coming out of a higher time frame, 1 hour fair value gap, right? We had an SMT. I was looking for us to potentially trade higher into this, this liquidity resting above us. So you could see here, it was essentially an immediate push up at this point in the market. Honestly, it was one of the fastest trades I've ever seen. It literally, I was in this trade for 2 minutes. It went into the order block. And then I think at 9:45 Eastern, something happened that pushed the market up, and I had my limit order sitting up here. It filled me immediately, and I was out for about $300 on this trade. So that was a really, really smooth trade. It definitely isn't always that quick and smooth all the time, but you know, it was a quick trade, and I was pretty much at that point done. But I will show you one other trade that played out, right, that I really wish I would have taken that I didn't end up taking. So you can see once we swept this liquidity here, right, this was those highs from last night that I mentioned at 9 and 10 p.m. At this point, remember, we still had those daily fair value gaps below us, plus all this low resistance liquidity. So at this point, this is a pretty good short opportunity here, right? The S&P 500 had also taken out the highs from yesterday, right, and last night. So this is a pretty good short opportunity here. So what I was potentially looking to see at this point, I didn't end up taking a trade because I take a trade and I'm done after that. Like I'm usually one and done once I win in the morning. I don't want to force it and give them any money back. So I'm usually done. But this was a really good opportunity. So if you see here, we came back, retested this inversion, right? And then the market then traded higher here, right? We took out the liquidity here. And then you can see here, we formed this fair value gap, right? We had this bullish fair value gap, which the market was holding. We come up higher, right? We ultimately form another fair value gap here, right? So now we have two bullish fair value gaps. The market has taken the liquidity that was resting above this high, right? So now we have taken this liquidity up here, right? That I targeted. That was the initial liquidity that I sold off of. And so at this point now, if the market is going to reverse, I potentially want to see us now begin to disrespect these bullish fair value gaps and have a change in state of delivery, right? Meaning now the order flow will change from bullish to bearish. So you can see here at 9:55, we begin to trade back down into this fair value gap. We now disrespect this bullish fair value gap. And now you can see here, we have, if we can close below these series of up close candles, right, from 950 to 952 or 951 to 952, if we can close below that, we would now have a change of state of delivery, right? Meaning now order flow is changing from bullish to bearish, which tells us we could potentially sell off into all this low resistance liquidity and ultimately, you know, this bullish fair value gap on the daily chart, right? Because you know, you have to be watching what the market is giving you at any point in time. I wanted us to go higher and take this liquidity, but if we're taking liquidity down up here already and we get a change in our order flow from bullish to bearish, the market is telling you, hey, I'm about to switch from bullish to bearish. I'm not going higher anymore. I'm not going to sit here and impose my will on the market and say, no, we have to go higher because that's what I thought you were going to do. If it's telling me it's going lower now, it's going to go lower now. So you can see we had then this change in state of delivery was validated once we got the close below here, right? So now essentially the market was now saying, hey, I'm now in a sell program. I'm going lower. Whether or not you're in or not, it's up to you. I'm going lower. So the market then does come back. We retest this change in state of delivery. So this would have been a great entry here. Again, because I was done, I wasn't looking to take it, but this would have been a great entry with a stop loss above this high, right? Because if we break this high, we're essentially saying we're going to go higher probably, right? And a target at least either at this low, right? This is a low hanging fruit objective here, this liquidity here, right? Because we have relative equal lows here. This low from 850 plus this low from 938. Those are relative equal lows. Or you could target all this low resistance liquidity, taking partials at each of these lows here, right? You could have took a partial here. You could take a partial here, right? You could take a partial here at this low. You could take a partial even at the ultimate low at London, right? This was the 3 a.m. low, which is London lows. So there was plenty of partial opportunities here. Honestly, on this trade, this is a great risk to reward. You're pretty much, this is the manipulation, right? This is the smart money reversal. This is where big money is now getting into their position, right? They've manipulated retail. They've got all the retail traders out. They're now getting in, getting ready to sell off. It's Friday, the end of the week. They're about to make their money, taking their profits. So you can see here, we do trade a little bit higher into this inversion here, right? We have that inversion. Once we get back below it, we trade a little bit higher, but you can see we keep closing below this inversion, right? There's never a reason at any point in this trade to worry, right? As long you set your stop loss and you let it go and you just watch price. As long as we're continuing to respect the arrays as we should, then everything is going exactly the way it should. So you can see here, we get the sell off, right? And at this point, it's really just about holding and putting your seatbelt on, right? Because it's about to go now. And this is honestly great delivery, right? We get this gap here, which should stay open as a breakaway gap, right? Doesn't have to, but it's ideally to see, it's good to see that stay open as a breakaway gap. And then we ultimately just continue to sell off, right? Kind of chop around a little bit, but ultimately we do sell off here into this liquidity here. So you could have definitely took your profits here and been done, right? It was a great trade. And you can see this at this point, it's still no reason really to think we're going to go any higher, right? Unless we were to get a close above here, it's no point to think we're going to go higher, right? Because that would be a change in state of delivery. at that point, right? So we continue trading lower, continue trading lower. And then you can see we never really get any displacement above this high, above this opening price at 1020, right? This doesn't really count. That's a little 2-point mohawk, but you can see we continue to trade lower and kind of just trade sideways until we do ultimately end up taking those lows here at London. So you can see this was a great trade if you would have held that the whole way through. It'd have been a long hold, but you know, price never really told you that you had to sell. So that was the trade. Honestly, that would have been the better trade. But again, because I was already done for the day, I got in here, took my money here, 2 minutes in and out, good lunch money, $300. You know, I'm good. And I don't need to really be in here trying to force and impose my will. You go enjoy the rest of your day, right? That's ultimately how I like to read price. And again, this is my model. This up here is my model. This is also my model, but this trade here was the better trade to take today, right? The sell off, the reversal back down into London lows and ultimately into that daily fair value gap, which you can see now we are now trading inside of, right? We just hit that at about, what is it? 2:30 Eastern. We're not trading in there. So it would have been a great hold all day long into this. So that's about it. That's all I got for y'all in this one. Definitely a lot more content and videos on the way, trade recaps, things like that. Also plan to be doing a beginner's course sometime in the future for a lot of these concepts. Again, if you're new to this stuff and you don't understand it, it's not expected that you would understand anything I'm saying in these videos. These are very, these concepts take time to understand. So I haven't really taught or explained any of these things yet. I'm really more so speaking to people that already understand what I'm talking about. So these are ICT concepts, and that's what I used to trade. So that's all I got for y'all on this one. I will see y'all in the next one.